I think the big issue in Greenbushes is obviously there is a lot of latent capacity in Greenbushes that can come into the market. Now, the big question is when that will come into the market. And, potentially they could double production out of Greenbushes.
Wow, that is phenomenal. So what would that be? What, 3 million tonnes of spod?
Yeah, something like that.
Wow.
So, I mean, if they wanted to, they could. So the big question is, will they? Obviously, that's quite a big investment in terms of concentrator and processing infrastructure and everything. But given that the hydroxide refineries haven't covered themselves in glory, shall we say, if they want to maximise their exposure in the market, then obviously it's got to be spod con.
This is general advice and my opinions only. CFDs are high risk, past performance isn't reliable, I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. LEVRD operates as corporate authorised representative 001318377 under AFSL 548573. You can find our financial services guide via the LEVRD website link in the show notes.
Righto, bag holders and stop loss haters. With oil price rising, the pump is costing everyone shitloads. And my theory of being maybe EVs are about to take off. And the one man that loves a good boom or bust cycle to analyse is Mr. Matt Fernley. Battery Materials Review, now part of RK Equity, Matt, I think is all correct. How are you, Sunshine?
Indeed, good to see you again, Matt. Nice to be back talking with Australia, I mean a lot of stuff going on in the markets at the moment. Really difficult to analyse. Some good opportunities and everything. So let's get into it.
Very much so, mate. As I said, you're a bit of an expert in the supply demand model field for probably the most boom bust commodities or chemicals in the world, namely lithium, nickel, and rare earths. And we are at an interesting point at the moment. You've been beating the drum about lithium supply demand when everything was in the toilet. And how are you looking at it at the moment in the lens of rising oil prices, a bit of uncertainty about oil, and maybe batteries just seeming pretty cool at the moment?
Yeah, well, I mean, it's been a difficult couple of years. I mean, I think EV sales growth was slowing, which wasn't great for lithium. And then middle of last year, the ESS story started to go ballistic in China, in the Middle East, etc. And that resulted in a big inventory clear out, and lithium prices started to take off. Come the beginning of this year, everybody was raising their ESS forecasts and, looking quite good for lithium, clearing out inventories left, right, and center. And then comes this little issue in the Middle East. And of course, the Middle East has been a big driver of ESS shipments demand over the last sort of 6 to 12 months or so. And everybody starts to go, ooh, maybe that's not great for lithium. I've sort of come back and taken a view on the EV market, which has been slowing. And of course, if oil prices go up, and they have gone up 50% on current numbers as we record today, it could be higher or lower by the time this goes out. But that's likely to focus people's eyes back on EVs again. And if that's the case, then we might see another move in EV sales growth. And I think the other thing to point out is that, yes, Middle East has been very impactful in terms of ESS demand. But compared to China, it's nothing. And the 5-year plan from China, again, is supportive of power infrastructure and ESS and batteries, etc. So, my view is that if China continues to grow great guns, Europe is doing well. Australia is actually a very important market for ESS as well. Chile is doing well. Other areas continue to do well. I think lithium remains tight, and I think we could go on a nice run over the next sort of 6 to 12 months or so.
If you net out all of that, so if you've got potentially more EV sales because of higher oil prices, but you could have less EV sales due to higher inflation. You've got less ESS demand out of the Middle East. If you net all them together right now, do you think lithium price goes up or down?
I mean, I think it's a really difficult situation because I think lithium price was too high at the beginning of this year. So lithium price overshot at the beginning of this year. It started to sort of correct back. We do have a little bit of an inventory problem in the system at the moment with regards to ESS inventories. They have blown out very high. So I think, near term, it looks a little bit rocky on lithium. The nice thing about lithium, though, is we've got less speculative activity than we've got in a lot of industries, and a lot of that speculative activity has been rumbled out over the last sort of 3 or 4 weeks or so with the Chinese New Year and everything. So I think lithium prices are probably within 5 to 10% of their fair value. And I think, if we get to a reasonable level, yeah, definitely, we could have another nice run in lithium in the second half of the year.
Now, I'll say this as politely as possible. You've kind of said previously that analysts have their supply-demand models wrong. Do you?
No,
in terms of lithium, mate. And if you still believe that is the case, mate, could you rehash where the supply and the demand is coming from that is sort of getting missed on each side?
Okay. So I can talk about both sides of the equation in lithium. For me, one of the issues that we struggle with on the ESS side is that the world and his wife have their solar installation forecast wrong. So the world and his wife are underestimating solar installations and have structurally underestimated solar installations for the last 10 years. So on the demand side, my view is that people are structurally underestimating the strength in ESS, and particularly out over 10 years or so. So I think that if you look at the numbers there, a lot of analysts are, for instance, forecasting explicitly for 2 years and then going to long-term growth rates after that. And of course, long-term growth rates in this sector are quite low. So they are structurally underestimating demand, 28 to say 40, for instance. And you've got to, this is a secular demand event. You've got to forecast demand over a 10-year period. There's no point in forecasting it for 3 years and then going back to long-term demand growth forecast. So that's on the bull side. On the bear side, I think that there are a number of quite dangerous assumptions being made in EV land. So in EV land, I think a lot of analysts who are not specialists are, first of all, overstating lithium loadings in batteries. So if you look at the consultants who are very close to the industry, their lithium loading assumptions in every gigawatt hour, for instance, of batteries, is probably 30% below where a lot of sell side analysts are. So I think that a lot of sell side analysts are structurally estimating how much lithium is used in a battery, and therefore structurally overestimating lithium demand. And then on top of that, I think a lot of analysts are making incorrect assumptions about where EV battery sizes go. So I think a lot of analysts are overly bullish on EV battery sizes and therefore structurally overestimating lithium demand. Having said that, I'm not any of those things, and I'm still forecasting a big lithium deficit over the next 4 to 5 years. So, I think it's possible to forecast and be bullish on the lithium space, but still have a reasonable understanding of, how much lithium goes into a battery and what battery sizes are likely to be going forward.
Yeah, and so what's driving it mostly on the supply side? Are you pushing out a lot of projects that other people have coming online sooner, or is it other jurisdictions that aren't contributing?
To tell you the truth, in lithium, it's really a demand story. So,
Okay.
we have lithium demand going at sort of 15 to 20% a year. Now, I've been covering commodities a long time, and I never seen a commodity sector that can add supply consistently at 15 to 20% a year. So that's what we're struggling with. Demand is growing very, very rapidly. It's still quite an immature industry, and the industry is struggling to keep up with that. On top of that, the issue that we have is that a lot of the technologies in the sector at the moment are not commercially proven. So stuff like DLE brine, like sedimentary lithium in the States, we have them in our models, but there is a concern that they may not, one, start up at all, or two, start up when we forecast them to start up. So there is a sort of, the potential for these projects to sort of get pushed back as well.
Yeah. That'll be that's Rio Tinto's jam in a decade, possibly, but a decade.
Oh yeah, I mean Rio, when they did that acquisition, I was like, oh wow, this is fantastic. They've got amazing sort of optionality, and all of these projects seem to be moving further and further back, and you're like sitting there going, oh okay.
How are you looking at if EV sales are going to rise? How much are you attributing to the longer range stuff, and hence how you're thinking about nickel at the moment in parallel with lithium on the back of potential and Indonesian supply disruptions and a higher nickel price? How are you viewing that commodity?
Yeah, I mean, I think nickel and EVs is a little bit difficult because 5 or 6 years ago we didn't expect LFP to be so big, and LFP has been big. Now a lot of people sort of are shooting the death knell for high nickel batteries. I'm not so bearish, because the real issue is that if the US and Europe and the West are serious about setting up their own supply lines, at the moment there are no sources of phosphate in the West. So either you're beholden to Chinese LFP cathodes, which the Chinese are not happy to export for the advanced technology products, or you continue to rely on NMC batteries. And I think realistically, we continue to rely on NMC batteries for premium EV models, certainly in the near term. And if that's the case, then there's a reasonably good demand story in nickel, but probably not quite as strong as we were looking at sort of 3 to 5 years ago. And kind of what we're seeing in nickel is sort of what we've seen in cobalt over the last few years. In 2017 we were like, yeah, cobalt's going to the moon, and then we engineered it out. And then in 2019, 2020, we're like, yeah, nickel's going to the moon. And then we started engineering it out. And if you look at the sort of new techs that are coming out of GM and Ford, they're quite manganese-rich batteries. God knows where they're going to get their manganese from, but we won't go into that. But lower nickel, we are seeing LFP starting to gain market share, particularly in the sort of ESS space. We see people talking about sodium ion as well, which again it takes away from nickel batteries. So we've still got a strong demand growth story in nickel, but it's not quite as strong as what we were looking at sort of 2 to 3 years ago. But more of the supply side, I see stressing it. So obviously you had Indonesia killing nickel in the last 5 years, and now Indonesia is potentially rolled up as the savior for nickel now, because they're cutting their quotas, their supply quotas. And straight away you're starting to see nickel production in Indonesia starting to fall away, and what's not falling away is driving the cost up. So the cost of nickel production is rising, because if there's lower Indonesian quotas, then you have to bring it in from the Philippines. Obviously power prices are increasing, generally because of what's happening in oil and gas, etc. That provides a support for the nickel industry in a way that we haven't really seen before, or haven't seen recently.
Yeah, I remember your counterpart on your Battery Materials Review podcast actually was the only one on a panel, I think it was, that predicted that NMC batteries were going to be the dominant battery in future. But it sounds like from what you're saying, the nickel makeup of that battery is going to be a lot less than originally predicted. Is that your view as well?
It's difficult. I mean, the primary sort of product in NMC is the 811 battery, which is the high nickel battery.
Yeah.
We have seen less erosion in the mid nickel areas, because those sort of high voltage batteries are in big demand for EVs going forward. And high voltage sort of electrical architecture is very much in focus because it reduces the amount of copper and stuff that you need in your car. So I think that high nickel batteries will continue to dominate in terms of having the best energy density, balance, etc. But obviously, if nickel prices go up, then there is a risk for high nickel, and maybe we pull back to mid nickel. And then, of course, the high manganese chemistries that Ford and GM are championing have a little bit less nickel in them.
Very interesting. The nickel price is just going to continue fighting itself. it appears.
I mean, in nickel, it's always been about supply, and it's been about stainless steel, and sort of batteries is an element of nickel. If stainless steel demand starts to ratchet up, then all bets are off, and we're going to go out and buy nickel. And then obviously, if supply remains constrained in Indonesia, then that's going to take a lot of material out of the market as well, and that's going to support nickel prices as well.
Very interesting, mate. Let's get on to the ASX stocks, the tier ones. I assume if you're plugging numbers into your supply demand models, you have a bit of a take on these companies. Pilbara Minerals, MinRes, IGO, and Liontown. 1, 2, 3, 4. What do you think about them? What's your bull and your bear for each of them?
Well, I mean, I think Pilbara has emerged over the last 3, 4, 5 years as the blue chip lithium company. You had huge increase in capacity, huge growth. It's a well-run company. The MD is, looking out into the industry. He's looking at other alternatives. In the background, you've had this Calix tech with the lithium sulfate intermediate. There's only 3 or 4 companies in the industry that have been sort of looking at that as a solution over time. So I think, Pilbara is a very, very well-run company. It's got one of the largest lithium assets in the world. It has the capacity and the potential to grow substantially, and it's the blue chip, pure play lithium story in the world at the moment, in my view. Below that you've got, I want to say it, but odds and sods. So you've got IGO, which is sort of like the sort of minority owner in one of the world's largest, lowest cost lithium assets. You've obviously got uncertainty on the lithium converter, although the gossip in the industry is they may be starting to improve the situation there. So we'll wait and see.
Oh, God, I don't think what people want to hear that. I think they just want to see it shut.
Probably not. They want them to focus on
down.
On supply. I think the big issue in Greenbushes is obviously there is a lot of latent capacity in Greenbushes that can come into the market. Now, the big question is when that will come into the market. Potentially they could double production out of Greenbushes.
Wow, that is phenomenal. So what would that be? What, 3 million tons of spod?
Yeah, something like that.
Wow.
So I mean, if they wanted to, they could. So the big question is, will they? Obviously, that's quite a big investment in terms of concentrator and processing infrastructure and everything. But given that the hydroxide refineries haven't covered themselves in glory, shall we say, if they want to maximize their exposure in the market, then obviously it's got to be SPODCon, unless they experiment in sulfate. Greenbushes is the low cost asset. It's pretty well run, conservative. It's sort of like taking your mother-in-law to tea or something. And then you've got sort of MinRes and Liontown sort of sitting in the middle. A lot of doubts over the efficacy of going underground in lithium, the viability of it. I think to some extent lithium prices have sort of got their fat out of the fire on that. And then, MinRes, you do wonder whether lithium remains a core business for them. What's going to happen, what's happening with Mount Marion underground, where does the, production go from here? Are they a net seller of those assets? And if so, what sort of price could they expect to get for them? So I think you've got two major outliers, which is Pilbara and IGO, and then the other ones are just sort of like, well, yeah, much of a muchness, really.
Yeah, MinRes is interesting because I know that I think they're tendering for the recommencement of the Mount Marion underground development.
Yeah.
So feels like that's coming back into the mix. You've also got Bald Hill, and then expansions at the re-expansion at Wodgina. So do you see?
Yeah, I mean, potentially you've got a few trains at Wodgina that could come on.
Yeah.
So that's very interesting, and then you've got obviously the second tier, which we haven't talked about, where potentially there could be a lot more supply coming into the market from guys like Wildcat and Core, and even then the third tier exploration into development stocks. You've got Azure, which nobody really knows about what's going on there. And then
have you got any idea what's going on there? Do you hear anything?
Really, no.
Yeah, right.
And then you've got the West Farmers SQM JV, the Earl Grey Mount Holland project as well. And again, that's pretty opaque. We don't really know, apart from 2 times a year when they report what's going on. So, there's a lot going on in the Aussie lithium industry under the hood, which could have impacts on the wider industry as well.
Yeah, because Andover was my next question. Like, that's phenomenal deposit, but like besides satellite images, can you confirm if is there any work going on there? Like, what is happening with that place?
I have no idea. There's no clarity as to what's going on at all. I mean, my gut feeling is probably they slow tracked it while lithium prices were low, and now lithium prices are coming up. They're starting to go in and invest some money on it again, but I guess we will find out. I mean, SQM being such a big company, there's really not a lot of visibility as to what's going on.
They SQM seem to operate very secretly within Australia because that's Mount Holland and Andover. Yeah.
So, and obviously, I think West Farmers only reports interims, don't they? They don't report quarterly performance.
Yeah.
So,
you're pretty much
not very much.
You're buying Bunnings if you're buying West Farmers. You're not buying lithium. Interesting. So parallel to Andover, like the Gina Reinhardt factor, just sitting there with her 20% of Linetown, mysteriously doing whatever she's doing with Andover. You can nearly bet your bottom dollar there's bugger all M&A during a war. There has been a little bit, but there isn't usually much. What do you think is going to happen there with Linetown? Do you see anything even happening there?
I don't really see anything happening there. I mean, I think that the market probably will leave them to do what they want to do. I mean, in fact, they've indicated that potentially they may be a buyer. I think they're looking at brines in Latin America and elsewhere. So, they with lithium prices at current levels, they should be making, a ton of cash flow, and potentially they feel that they like to grow by acquisition. And obviously, the larger you get, the less easy it is for anyone else to buy you out unless it's somebody coming from outside the industry. I mean, I think, one of the things that's been very interesting is that the majors haven't really been in lithium apart from Rio. If lithium prices remain high and lithium production is growing the way we expect it to grow, do some of these lithium assets then become, attractive to the other majors? I mean, you've got Glencore, you've got BHP, you've got Anglo Tech, now a reasonable level. We've started to see Glencore's trading arm being quite active in lithium. Does its mining arm start to look at lithium from here? So you've obviously got the oil majors quite active in the US. Do they start to look out with the US as well? So, I think lithium's getting to a size as an industry where perhaps it starts to look more attractive to the majors as, projects that could make a difference to the bottom line.
Yeah, and so if you're going to look at the biggest global deposits, whether developed or undeveloped, where do you think what would be the top few that you think M&A might happen on, that a major might get involved in to get access to?
Well, I mean, realistically, at this point, only the majors would look at Pilgangora because it's such a big company. But that has to be attractive. I mean, it's a single company with you know uh, uh, full ownership of one of the largest assets in the space. Um, Obviously, you've got some large assets in Africa, which, if scuttlebutt and everything is to be believed, particularly some of the American companies are sniffing around the DRC at the moment. I don't know if that actually happens. And then increasingly, you've got a number of really significant hard rock assets in Canada, particularly in Quebec. I mean, obviously, you've got the PMET story.
Yeah.
I'm not going to even try and pronounce the new name for Corvette. You've got
Shakachuiwanan or whatever it is.
Yeah, something like that. I just call it the ore body formerly known as Corvette. I'm not going. I'm going with the music analogy, the Prince. So I don't even try and pronounce it. You've got Q2 with the Cisco project. You've got probably 2 or 3 other world class hard rock assets in that region that I'm hearing about that could be north of 100 million tons resources. If you're happy to take a little bit smaller, you've got Brazil, smaller, lower cost. You've got the Brazilian assets. You've got Sigma in production. You've got 2 or 3 other development assets that could come into the market. And then, in the brines, it's a little bit more complex because the brines that are left over now independently are slightly lower grade than the existing brine assets that have been produced from over the last sort of 15 to 20 years. So you are probably going to be taking a bet on DLE for at least part of the process. So, we're all eyes on this Eramet project in Argentina to see whether which is a full DLE project, to see if it can sort of get up to production. But the problem with DLE is that one DLE project is not the same as another DLE project because they've got very different sort of chemical makeup. So it's going to be interesting. But I think those are the sort of the focus projects, I think.
So if you're going to pick, if you you had all your global major money in your bank account, Matthew, would you take Q2 at its price or PMET a bit further along at its price if you're looking for an undeveloped project?
I mean, the way I go is I will always go for the juniors. So I like me a nice junior and evaluation uplift story myself. So I would go that way. Not to deny that PMET isn't a great company or everything, but if I wanted to generate valuation uplift and time and money was no object, I would obviously be able to get a better price for the junior than I would for the producer.
Oh, very, very good.
But if I'm a BHP or Rio and I want something that's going to impact my bottom line now, then I'd have a different approach, I think.
Yeah, very good. Now you can sign off because now you're tied into rare earths as well. So we want to make sure you give that enough love. Do you think, did Gina just get tired of lithium or something and now just put her all the focus into rare earths? Because once she stopped buying Andover and Liontown stakes, that's like the rare earth stuff really amped up for her. And how do you give us your quick final 5-minute synopsis of where you see rare earths sitting in this chain at the moment?
I mean, I think rare earths looks very interesting to me because after the US-China rapprochement in October last year, rare earth stocks went nowhere, but rare earth prices kept going up, straight up. And I think, many people sort of looked at rare earths and went, the Americans and Chinese have sorted out their problems. We don't need to focus on rare earths anymore. Let's go and look at something else, like lithium, for instance. But actually, I think that rare earths remains a big issue. And, potentially people don't understand, how significant an issue rare earths remains. Obviously, the US government is very, very focused on rare earths. They've done these deals in the rare earth space. There's probably more deals they've got to do in the rare earth space. They haven't done enough in the heavy side of things. Heavy rare earths are very much in focus. Excuse me. Heavy rare earths are very much in focus in terms of the munition side of things, guided munitions, things like that. In terms of drones, in terms of humanoid robotics, which looks like it's going to take off very strongly off the back of the Chinese 5-year plan. So I think there's a really strong demand story in rare earths. And I think that the supply story, particularly in the heavies, is much tighter than people appreciate. And I think, rare earths is not really understood very well by the market, unsurprisingly, because there haven't been that many stocks there for a long time. So I actually think, rare earths is one of the big winners off what's going on in the Middle East at the moment and elsewhere, that's not really being appreciated by investors.
There is going to be a shitload of drones and ammunition and everything else to replace the amount of the billions of dollars worth that have been blown up during this last few weeks. Far out. That talk about a demand story right there.
Yeah. I mean, I think what's really interesting is that prices in China have basically been going up since October, but nobody in Western markets really twigged it until recently. And the rare earth stocks have been flat to a little bit down, and you're like sitting there scratching your head going, well, that doesn't work. Why is that the situation? I mean, to some extent, we've seen that really across the board. I mean, last year we saw a very strong correlation, for instance, between silver and silver stocks up until October, November, when that correlation or that relationship reset. And silver and gold stocks weren't as leveraged to the commodity as they were earlier in the year. So we've seen that in a lot of stocks, but we saw it excessively in the rare earth space.
Or even gold's disconnected a bit now. The money flying out of gold equities this week, which I'm just hating. But anyway.
Well, I've read a lot of stuff on this, and obviously, I do remember a little bit the first Gulf War. It was right at the beginning of my career. But, one of the things that I think we have to be aware of is that when you go into these periods, you see a lot of deleveraging. And there has been a lot of leverage. There's been a lot of speculation in gold and silver and copper and some of these other commodities. So I think to some extent what we're seeing now is a deleveraging as people sort of start to think, oh God, this could last for a lot longer. I need to sort of, deleverage to weather any shocks, and then I can start to think about resetting my portfolio after I've deleveraged.
Yeah. I will do that once this ends, if I've got any left. Anyway, mate, Matt, thanks so much for your time. As always, mate, you're a prolific YouTube and podcast attendee, and I appreciate you giving LEVRD some of your time, mate. You're a legend. Appreciate it.
Cool. Take care.